Hey, good morning. Let's go over today's trade plan. So in the overnight session, we can see that buy side held ES above the 81 to 83 support, and heading into the open, we're going to be using 81 quarter to 83 quarter as the initial support zone. And as long as the buyers can hold ES above that area, we know that they can maintain control even on the smaller time frames. And then on the upside, a breakout above the 86 quarter to 87 quarter pre-market resistance would confirm the smaller time frame bullishness, which would bring 89.75 to 91.75 into play, and 94.5 to 96.5. We could still technically see some profit taking at 94.5 to 96.5, but keep in mind that the overall bias continues to be bullish, and if the market is going higher on some decent upside momentum, with the other markets continuing to set fresh all-time highs, then ES could go higher as well and tag its own all-time high at 98 and even set a new and fresh all-time high. On the downside, in the event that the market fails to hold 81 quarter to 83 quarter, we'll know that at least on the smaller time frames, we're now starting to see the sellers get a little more aggressive. That can bring the 76 to 78 zone into play, and potentially 74, and even 70 to 72 would be within the range potential of the day. Since we're trading in an overall bullish environment, even if the market breaks below 81 quarter to 83 quarter, we know that responsive buyers can't technically step in at any of the support zones below. So in the event that ES does try breaking 81 quarter to 83 quarter, we have to assess the quality of the breakdown. So is the market breaking down on heavy downside momentum? Is the advanced decline line in negative territory and really trending lower? So we have to at that point assess the quality of the breakdown and whether it can result in a failed breakdown attempt at the 76 to 78 support zone. So if it's not looking like a very strong breakdown, then buyers can be active as early as 76 to 78. In the event that the market's breaking down on really heavy momentum, then even though 76, 78 could technically still hold, we could test a little bit lower at 74 to find the next group of responsive buyers, or 70 to 72, and then we have stronger support at 65 quarter to 67 quarter. So heading into the open, we are going to continue to give edge to the buy side above the 81 quarter to 83 quarter support, but we will need to see how the market's shaping up in real time in order to figure out whether it's still worthwhile to go long at 81 quarter to 83 quarter. So if we are trading at that zone and we're seeing excess weakness or downside momentum or a bearish disconnect on the advanced decline, then we'll need to be a little more careful at initial support. But if the market pulls back there and we're seeing a bullish disconnect and not really any downside momentum, then it could still be an area that holds. And then on the upside, we could quite easily tag 89.75 to 91.75, and that's not really a major area of resistance. In the event that the market can take out 86 quarter to 87 quarter, the next important area of resistance is going to be 94.5 to 96.5. Looking at the econ calendar, we have the pending home sales index out at 9 a.m. Central Time, and then aside from that, we have several tech companies reporting earnings after the close. So Microsoft, Amazon, Google, and Intel are all scheduled to report after the close, and that is a bit of a catalyst. So the Nasdaq may just end up balancing in a range in anticipation of these earnings announcements after the close, and that can have an impact on the S&P as well. And that's why even if the market breaks out above 86 quarter, 87 quarter, we could still see sell side active at 94.5 to 96.5. It doesn't mean that you have to short that area, but if you're long, unless you're seeing excess strength and a lot of upside momentum, not a bad idea to take profit at 94.5 to 96.5. So those are the main ideas heading into the open. Let's see how the market responds and holds up at 81 quarter to 83 quarter. That's going to help us establish our very short-term bias right off the open, and we'll take it from there.